Hello everyone. There's so many changes that proposed for the self-managed super funds and in superannuation area per se. But we are starting with some of the most prominent ones. One of them is removal of franking credit refunds, which already Mark touched on. As he explained that people would be on pension phase or in pension retirement phase would be affected significantly, and we have some strategies in place which can be used if this law is going to be, if this, the changes become a law. The second one is the reintroduction of the 10% rule for making personal concessional contributions. This particular rule is affected most of the people. At the moment, what happens is whether you are employee or you are self-employed, you can claim up to $25,000 worth of personal concessional contributions. But it will be affected after that rule. So I'll discuss in detail now because in the next slides. The next one is reduction in non-concessional contributions from 100,000 to 75,000. That's the current non-concessional contributions cap, which is a yearly cap, which is 100,000. What Labour is proposing to have it $75,000. We will discuss in detail that one as well. Reduction in the bring forward non-concessional contributions rule. So at the moment, if the person is less than 65 years of age, what they can do is they can put up to 300,000 at the moment into the super fund as a non-concessional contribution, which is 3 times of the annual non-concessional cap, which is 100,000. So you can put 300,000 into one place at the same time. What Labour is proposing to reduce it to 225K as well. So that will be discussed. Reduction to the high income and contribution threshold from 250,000 to 200. What it means is a person who is earning 250,000 a year would end up paying more tax in the Labour proposed changes, and that will be the last one we will look into that. The other changes are the removal of newly introduced carried forward concessional contributions cap. So from 1st of July 2019 onwards, which is not even implemented yet, but what Liberal has introduced that cap, which is you can carry forward the non-use concessional contributions cap. So if you haven't used anything, then you can use it in the next year, so that you are not losing out on those sort of caps. So what Labour is proposing is to remove that as well. And then one of the last one is ban LRBA borrowing arrangement in self-managed super fund at all. So what they're saying is no LRBA is in place, so you cannot buy properties by going through limited borrowing arrangement, which is by taking a loan. So those are the main changes they are offered, but we'll see how many of going through them. Now we will go into detail by one. So the first one, which is reintroduction of 10% rule to claim personal concession contributions. So what happens is, at the moment, if you're under 65, you can claim a reduction of personal concession contributions regardless of your work situation. So what happens is you can claim 25,000, maximum 25,000, which is that's a cap of concessional contributions cap. Every year you can claim up to that limit. But going forward, that wouldn't be the case, because what happens is what they're saying is that your total income plus your fringe benefits and your super contributions, a total of all those sort of 3, the 10% of that amount, if it's not from the employment activities, then you are not eligible to claim those personal concession contributions. So what happens is, if a person is earning too much by having no wages, then he will lose out on these proposed changes. So those were introduced to help self-employed people, but the benefit of that for the employed people is that they can have the benefit of that as well, which will be the case. For example, under the current law, if the employer makes a superannuation contributions of $9,500 on behalf of the employee, which means if an employee is earning $100,000, employer would put 9.5% superannuation guarantees, which is $9,500. But then the employee himself or herself put another $15,500 out of his pocket into the super fund and claim the deductions of that $15,500 against his or her other income. So that person would have this additional benefit of deductions of $15,500, which wouldn't be the case if these changes would become a law. So that's the difference, which could be significant because if you see the deductions point of view, then it would be significant. What would be the effect of these changes? The lesser amount will be contributed into the super fund, of course, because that person wouldn't be making that 15,500 now because he's not getting any benefit out of it. So lesser amount will be contributed into the super fund, which means the superannuation member balance wouldn't grow at that level. And then the second thing, most of the employees who are currently getting the benefit out of it by claiming the deductions may not be able to do that. So those are the effects of that kind of change. The next one is reduction in the non-concessional contributions and the bring forward contributions. Why I joined those two changes? Because they are kind of connected with each other. The first one is at the moment, so if the non-concessional contributions, which is you don't have to pay any tax on that. So if you wouldn't have any paid tax on that, that's your money out of your pocket. If you put into the super fund, which is $100,000 at the moment, which you can make every year. Of course, if you are under 65, you don't have to meet any work test. But if you are between 65 to 75, you need to meet the work test. The work test is if you're working 40 hours in a consecutive 30 days. So if you're working at least in a whole financial year. So if you're working only 40 hours in a 1 month period, then you're meeting with the work test. And in that case, that person can make non-concessional contributions. And then on top of that, what are the current rules are saying that 100,000 is yes, but if you have a lump sum, if you want to put in a super fund, up to 300,000 you can put in a 1 financial year, and then you're still allowed to do that as long as you are under 65, because once you turn 65, you are not allowed to do that thing. But the benefit of that is, yes, you can put one lump sum into the super fund, and then you can start having the benefit of the concessional rates of the self-managed super fund. The only consequences of that, the next 2 years, you cannot make any contributions because you have utilized the next 2 years non-concessional contributions cap into 1 year. So you have bring forward 2 years of cap in 1 year. Of course, those rules are affected by the total superannuation balance of 1.6. So if you have more than 1.6 million in your pension accounts in the self-managed super funds or super funds, then you cannot make any of these contributions at the moment, because that's the very basic rules at the moment that are happening, that if you have more than 1.6 million in your pension accounts, you cannot make non-concessional contributions, and of course not bring forward rule applicable. Now, what's a proposed law? The Labour is proposing to have the non-concessional contributions kept from 100,000 to 75,000, and so it will affect the bring forward rule, which is from 300,000 to 225,000, because that's directly connected, so that's how it happens. What would be the effect of that? Same, the lesser amounts will be contributed to the super fund, which will not help members to grow their, because previously you can make 300,000 or 100,000 every year, which you cannot do it, you only put 225,000 or 75,000, which means it's kind of stopping you to put more money into your super fund. Reduction of high income superannuation contributions threshold for 250,000 to 200,000. This particular law is called Division 293 tax, and how it works is, if you're earning at your personal level as an individual 250,000, then what happens is at the moment is, for example, if you make a contributions, generally in a super fund it taxed at 15%, but because you are earning more than 250,000, they charge you additional tax of 15%. So for example, a normal person makes a contribution of 10,000 in the super fund, he ends up paying $1,500. But because this particular person is earning more than 250,000, he ends up paying another 15%, which is 1,500. So total, he ends up paying $3,000. That person ends up paying 30% tax instead of 15% tax. Now that's a current law, which is okay. But what they are proposing is that threshold of the income, 250,000, would reduce from 250,000 to only 200,000. So many people who were not in that tax or income bracket, now they will be affected as well. And I'll give an example of that.
Would that include any capital gains tax that you earned during that year as well?
That's right, yes.
Both?
Yes. So, in that particular case, what sort of income which is covered, which is your all taxable income, then fringe benefit, then tax-free government pensions, the foreign income which is not included in your taxable income, and any net investment losses. All of that would be covered in this Division 293 income, so which would cover most of the things. But anyway, so how it works is, Division 293 income, which is for example, this person has 220,000, and that person made superannuation contributions of 20,000. So total 240,000 on the basis of that. But because at the moment the Division 293 threshold is 250,000, so because that person is not above that threshold, there is no additional 15% tax payable on the concessional contributions. But in the proposed law, if the same situations are there, because the threshold has reduced to 200,000 now, that person ends up paying another $3,000 worth of contribution tax. So that's what the changes are happening, and those are the effects of that. So I'll put it back to Mark.
Yeah, that's just going back to this one here for a sec. Interesting with negative gearing as well, because if negative gearing is taken out, then I suppose the 200 will be a lot easier to get to.
True, very true.
So there's whammies all over the place. I suppose one other super one which more to do with businesses is that in relation to the super guarantee. At the moment, that's 9.5% that you have to pay. Labor wants to ramp that up to 12% by 2021.
Yeah.
So what does that mean for businesses? Do you increase an employee's remuneration by an extra percent, or do you factor in their current remuneration and say that's all inclusive of all superannuation? So from an employee's point of view, are they going to be able to afford the mortgage on their home, for example, if they've got less after-tax pay? So just another change which hasn't really had a lot of press. So let's put things into perspective a little bit. For things to happen, Labor must win the election. I've already given you the odds already. Reading an article last night on Domain, believe it or not, and they put the probability of an 85% chance of Labor winning. So it's all heading that way, or the news polls say it, or opinion polls say it, but then again, Trump got in. Richmond went to the grand final 2 years ago and won it, so all these little things you don't know, you don't really know to do. Labor must control the House of Reps, so that's the other thing, which I suppose everybody's predicting is going to be a landslide, but it's a long way to go yet, a long way to go. Labor must control the Senate, and this is the interesting one for me. One, there's 76 seats in the Senate, only 38 are up for re-election. So for Labor to control, to cut a long story short, they have to win 25 out of 38 seats to control the Senate. And so that's a fairly tall ask, a very, very tall ask. So on the assumption that that doesn't happen, then they have to get the support of the crossbenchers. The Greens do support the CGT changes and the negative gearing, but then other crossbenchers don't support the franking credits. So you might get a situation where there's going to have to be a bit of toing and froing and probably a lot of watering down of these measures. So all it's going to come down to the Senate in the end. So I think that's what I'll be looking for on election night, watching Channel 9 at 7:30 and seeing the results. That's a very interesting one. So I think in summary, I think that's all that we do.